You think we get a deal tomorrow?
Our base case is still that a deal will eventually happen.
Eventually.
But the challenge for markets and investors is that, over the last year, even over the last 2 years, with the threat of, trade escalation, we've basically been watching this very public negotiation happen in real time. And so obviously it's basically, a soap opera that we're seeing with the market swings in each direction.
A multi-year soap opera.
A multi-year soap opera. And right now the market is focused on tariffs. I think it's important to remember that the issue with what's happening with the negotiation is one of short-term market reactions. The question is not whether or not tariffs will be put in place. We do have tariffs in place already. These tariffs were already supposed to rise to 25%, but that was delayed for several months earlier this year.
Good point.
And so that's not really the issue. The issue is not one of, what is the long-term underlying economic impact. And so ultimately, we think the base case is still that a deal gets done. But the question is at what level and what kind of impact will that have on the overall global economy in the meantime?
And there is an important caveat. Though the tariffs will rise in 19 hours, 12:01 a.m. tomorrow morning Eastern Time, multiple reports suggest that those tariffs will not be enacted on goods that are in shipment. In other words, if it takes 3 to 4 weeks to get from a port in China to here, the goods on those ships will be immune from the tariffs. In other words, maybe that buys President Trump and President Xi a couple more weeks before the impact on consumers is felt.
Yeah, I think that's absolutely right. There are certainly technicalities in exactly what it applies to. We're talking about a couple $100 billion of goods, yes, but exactly how that's enforced and put in place, that's the bigger question. And the other issue for investors too is that this is something that's going to rattle markets for quite some time. Even if a deal is put in place, the questions around enforcement, around monitoring, around intellectual property, the bigger underlying core issues of this negotiation, that's not going to go away anytime soon. So I think the key message to investors is, look, this is a source of short-term volatility. Yes, the last few days have been, the market's been rattled by this, but this is a short-term market reaction issue, not a long-term economic issue.
Would a 15% jump in tariffs, James, on $200 billion in goods, about $30 billion max, would that have the power to send the economy into recession?
We think the answer is no. Just that alone, the answer is no. The truth is the economy in the U.S., unfortunately, is still healthy, but is, in fact, slowing down.
Yeah.
And so a minor impact from tariffs, which, by the way, is not just, it's not, the question isn't, does it hit the economy directly? It wouldn't. It basically gets balanced out throughout the economy. And we're talking about tariffs on Chinese goods coming in. And so, again, there's a balancing effect. The issue is really, will that basically throw us into a recession of some sort? And the answer is probably no.
Let's put that into perspective, maybe the best way we can. A $30 billion jump in tariffs is approximately 3 hours of federal government spending. Federal government spends about $10 billion an hour.
Right.
And so you look at that and you put that through. So you're saying a couple cents increase maybe on goods for all Americans across the year is really what we're talking about.
Well, the two ways to look at this.
Not defending the tariffs in any way,
yes,
but that is not enough with wages on the rise and the economy pretty strong to hurt us.
I think it's important to put it in perspective, but there are really two different perspectives here. One is just on the overall economy. It's really, ultimately negative for the global economy, but it's not enough to send us into a recession of some sort. The second piece of it is just on individual companies. I mean, obviously, this affects those who require, foreign-made goods, foreign manufacturing, foreign imports a lot more than those that don't. And so, you look at where stocks have been trading, obviously, over time, this could affect areas like technology a bit more because a lot of these inputs are produced elsewhere, and it may affect large cap stocks which rely more on international revenue sources rather than, let's say, small cap stocks. But again, I mean, none of this is new to investors. This has been playing out for quite a long time, and the market has reacted to it. We think that most investors should probably look through a lot of the headlines that we're seeing this week, and basically, look through to the economic impacts.
Well, let's look through to maybe the second derivative impact. Because the president is not just threatening 15% jump in tariffs on $200 billion.
Right.
He's threatening new 25% tariffs on another $300 billion, which would effectively be all the Chinese imports. Right? We import about, $580 billion a year in goods. We don't sell that much to them. We import a lot more. If we get a 25% tariff on everything we import, then what?
then you start seeing issues. So it's not just those additional tariffs on the majority of Chinese imported goods, it's the retaliatory impact you would have from China, who would also start escalating tariffs on our exported goods. And so then you have a real escalation in trade wars, and that is sort of the left tail worst case scenario that the market is trying to figure out how to price in right now. And so we do see that as a possibility. Obviously, that's been a possibility for 2 years. We just do not see that as the most likely scenario. They are having trade talks in D.C. this week. Clearly, both sides have shown goodwill throughout these negotiations. Even just last week, we
You think so? Goodwill?
There's certainly been goodwill in terms of.
I mean, there's a lot of rhetoric on the campaign trail, like last night. And let's be clear, that is the campaign trail.
That's right.
But you think behind the scenes, there may be more handshakes than harsh words?
We think so. The underlying economic realities of both countries is that they do want some sort of deal to get done. Obviously, there's lots of issues underlying that, but if a deal can get done, then hopefully that'll calm the markets and reduce another source of uncertainty for most investors.